Clucks, and this is the Prospector Podcast. And I have joining me contributor Ted J. Butler. Welcome, Ted.
Thanks for having me, Mike. Great to do this as always.
As always, so we had a very productive end of February, early March. You and I saw each other in Miami. And then you had a contribution for the March-April edition of the Prospector, which came out on March the 1st. And both events had a similar theme. The propensity of gold and silver to be outperforming the general markets. You had a very interesting debate with a very strong heavyweight in our industry, Mike McGlone, the senior commodity analyst for Bloomberg in Miami, where you guys argued whether or not silver would actually outperform gold. At that time, both of you were still projecting a $3,000 gold price. We're on St. Patty's Day here on the 17th, and last Thursday, gold in fact touched that 3,000. So you were both right in that account. So let's take a look at gold. I know Mike McGlone likes to say the rock beats the stock at the moment. How are you feeling about it?
Yeah, it was a pleasure to share the stage with Mike, and it's difficult to argue with gold and his experience. And I think we found a lot of common ground, to be honest, Mike. I think he wasn't necessarily saying that silver won't outperform. It's just that he's very much more bullish on gold, and so am I. And it's obviously the central bank demand has been the major driver of that. Everybody knows it's well documented. And yeah, it did. That's basically driven the gold price to kiss $3,000. It's since fallen back into the 2,900s. But I don't doubt that if this general global geopolitical uncertainty continues with Trump's tariffs, which I'm sure we're going to get into, or at least the threat of them, and the resulting sort of fragmentation between the West and Macron even talking about potentially funding some kind of EU military. The G7 itself, when you look at the comparison between the G7 and the BRICS, it's stark. It's a juxtaposition when you think about it. It's you've got this sort of coordinated effort on one side of countries that are singing from the same hymn sheet, and then you've got the West, which is quickly becoming America on its own, America versus the world, plus the G7, and then obviously the UK no longer part of the EU. Really, it's Italy wanting to be part of, wanting to leave the EU at certain moments. It's a real stark contrast.
Yeah, it is. And one of the things that markets really don't like is uncertainty. And we've seen that with a substantial sell-off of the American stock markets. And you're right, that money seems to be piling into gold and silver, gold hitting new highs, silver still underperforming, but reaching more recent highs. That seems to be a move towards the precious metals and away from risk assets in a lot of ways. And given Trump changes his mind like daily, like we're going to have tariffs, we're not going to have tariffs. Now we're going to have these tariffs, but maybe not those tariffs. It can't be easy for the markets, and they're looking for insurance.
Mm-hmm. Yeah, and you make a great point about the tariffs and whether we're not going to have them. And it's almost like the boy who cried wolf. It's how many times can he call for them and then not impose them before the market starts to doubt what he's saying. But in the meantime, the uncertainty that creates is significant. And but really, Mike, as we know, the gold price has very much been the star in the headlines, even making it into the Financial Times, who historically haven't even gone anywhere near gold. Simply because it's this pet rock that was really, they've acknowledged, associated with, lunatics or people who you would meet at the investment conferences on the sidelines and, the preppers or whatever. It's proven itself that it's a strategic asset, and it's actually, the mainstream media have been forced to concede and accept that gold is the number one neutral asset right now. And I really do believe that as historically has been the case, as I wrote in the article, silver will go on to outperform. And it's interesting because the economists, who again, typically mainstream media, very little coverage of precious metals in general, on March the 6th, they released an article titled Silver is the New Gold, which is very great news for silver investors, really, because it suggests that silver is finally making its way into the mainstream media. And as we know, typically there is this lagging effect, Mike. Gold leads and silver follows. And on average, it's sort of typically 12 months after gold breaks through its previous all-time high, that silver actually starts to accelerate. And right now, silver price is just under $34. It tested 35 nearly about 6 months ago in 2024. And now I think it's definitely, when you look at the supply demand situation, when you look at the gold's continued outperformance, which is continuing to exacerbate the gold silver ratio, I think silver investors should be absolutely steadfast and accepting that they're in the right place right now.
Yeah, that was one of the things that stood out, and you helped from with that in your discussions with Mike in Miami. That with the gold and silver ratio being overextended at about 88 to 1, when it's typically more of a 50 to 1, the silver itself should be closer to a $40 mark right now than where it currently is, and that's that lag that you referred to. But if we want to go back, it was 12 months ago. It was right after PDAC. I remember this because Brian London, who's one of our gold analysts here at the Prospector News, said at the MIF just before the PDAC that gold is about to make a breakout. Well, during the PDAC, look, gold makes its breakout. He would like to take credit for that, but he knows that that was just a happenstance. But that was the breakout past that old high. And you've stated that silver traditionally it's 12 months, which would put its breakout to be starting up any time now.
Right about now. Yeah, I mean, just for context, that's the mean or the average of typically where the acceleration in the silver price comes 12 months after gold price breaks through previous all-time highs. But there's definitely been cases where silver investors have had to exercise more patience. For example, in 1972, the acceleration didn't really begin for maybe 16, 17 months. It was much more elongated and less of a volatile increase, as has happened in the bull markets of the past, as we've seen in 2011. But really, Mike, it's a huge opportunity, and I guess the question is, what is the catalyst? I mean, you mentioned the gold silver ratio 88 or 89, wherever it is today, and you think about the mean since 1971, when we came off when Nixon broke the gold standard with the final nail in the coffin, as I like to call it. Since that day, the gold silver ratio has averaged 60. The mean has been 60. So if you think at a $3,000 gold price, if you do the math, that silver really should be $50, and that's just reverting to the mean. And so what's going to be the catalyst? Well, really the catalyst comes from the supply demand side, the fundamental side. Interestingly, I was listening to Warren Buffett's reasoning for his purchase of silver back in 1997 to 1998. And it was a similar justification. It was, we recognize that there's an imbalance in the supply demand fundamentals. And we believe the only thing that will necessitate and resolve that supply demand imbalance will be higher silver prices. And actually, many people think that Buffett held on for a lot longer than he did. He actually only held on 2006. During which time the silver price went from $5 in 1997 to about $10 in 2006. Obviously, silver investors will know that silver went up to $50 in 2011. So had Buffett held on longer, he could have been even more satisfied with the performance. But that's where we're at today. It's whether silver investors were to sell in a couple of years' time, or wait until the peak. That's at their level of risk tolerance, discretion to decide. But the question that I'm really interested in at the moment is, what will be the catalyst? And we can talk about whether it's solar, we can talk about whether it's the military demand, Trump's tariffs, which is causing an increasing amount of dislocation to the silver market. But there needs to be a catalyst, I feel, to help that reversion to the mean materialize.
You're probably right, but this is always why they call silver the devil's metal. It's that it's part industrial and it's part precious. So it can react like the industrial metals and does a lot of the times, and then there's these cyclical moments where it acts like a precious metal, and that's when you generally get these breakout highs like $50, 75, where a lot of people are calling for this breakout high to end up. I guess the catalyst to me is what turns it away from being an industrial metal into a precious metal. Would be what would drive the market and push the silver price a lot higher. So to me, it's the same thing that would drive a gold catalyst to make the gold prices continue to rise. Um, and they call silver the poor man's gold because when you can't afford gold anymore, you can still pay for silver. So, what's your thoughts?
Yeah, I mean, that's a great point about potentially the reignition of silver's monetary metal status, and many people have talked about that. And undoubtedly, industrial demand is taking up a larger share of silver demand in total. It's difficult to deny, but I would also argue before we get into the monetary side, which we can do, that industrial demand on its own could be a sufficient catalyst to drive this the silver price higher. If we look at the extent of solar demand, yes, the growth in solar capacity additions is expected to slow. But if you look in the context of how fast the growth has been and how aggressive it's been, the IEA, who notoriously, the International Energy Agency, notoriously overestimate the capacity for us to move forward with this green energy transition. And they've underestimated solar demand for the last, sort of going back to 2009, consistently underestimated it. So consistently, solar demand has outperformed, and now it represents about 20% of total silver demand. And there are different pockets of the world that are actually going to continue that trend thanks to how cheap the solar panels have become, driven by China's enormous disparity between capacity and demand. For example, Saudi Arabia, they have enormous plans to essentially make solar the successor to their oil and gas dynasty. These huge plans, bigger than the 5 gigawatt plan that India had, which was, in and of itself a big project. I think that there's one that they're talking about that's up to 17 gigawatts. And that's huge. And those annual increases will help to offset any potential declines from China, who, as you know, Mike, have been incredibly aggressive with their rollout of solar capacity. And they currently face the prospect of a deflationary spiral, and that could very much impact solar demand. But at the same time, we have other countries waiting in the wings to take over that demand, and that could potentially serve as the catalyst that continues to push the silver price forward.
Yeah, that could very well be. Like I look at the silver and I see a lot of headwinds. You have Trump going tariff, and China being one of the big targets for it. One of his pet peeves with Mexico is Chinese manufacturing setting up shop in Mexico and servicing the United States to circumvent the tariffs on China. That's one of the justifications he's using to tariff Mexico. And the Mexican solar industry is a big contributor to that thought and feeling coming from the U.S. president. So I see those headlines, and I wonder if those two projects that you mentioned in India and in Saudi Arabia are enough to offset the headwinds in the rest of the West.
And maybe they're not. And in that case, I think there are other silver demand drivers that would actually pick up the baton in that sense. There's this more of an emerging technology, as we know, and it could take a while for it to take off. We've talked about in the past the prospect of the silver solid state battery from Samsung, Mike, and how much more efficient it is relative to the lithium ion batteries in these EVs, and ultimately how much more silver content it has. I mean, on average, it's expected that these new batteries have 500 grams to a kilogram of silver in them. And that's relative to an average of 50 grams. Well, a high of 50 grams, the top end averages for the normal EVs with the lithium ion batteries and the nickel. So the disparity, if that really takes off, if that proves itself to become more efficient, if that proves itself to actually become cheaper and accessible to the market, because that will be a big factor. These solid state batteries are still quite expensive, and so adoption isn't going to happen tomorrow. But that could be just as solar was the successor to photography, such is silver's utility, that the solid state battery could become the successor to solar. And it might not even be that. It might be nuclear. It might be the military side of silver, which is often a taboo topic. But I have it on good authority that during 1942, when we were in a World War II scenario, and of course the demand for silver as a military metal was elevated, that we were using about 100 million ounces of silver annually, or the US was, just in the military. Now, that's an extreme situation, but you imagine if we continue on this path towards World War III, and it actually materializes that silver will be used as a military metal, and it will rise from where essentially as low as 20 million ounces. I mean, that's what Jeff Christian, who's of course a very respected analyst in the industry, reckons that silver military demand is annually. But it could rise to 40, 50, 60 the moment that these tensions start to escalate.
Yeah, that's true. But let's circle back to the investment side of the coin,
Sure.
because ultimately that's what's going to cause the price spikes that are going to, drive things up. And when you talk to investors, they fixate on the gold silver ratio, which, as we mentioned, is somewhere around 88, 89 right now, and it should be closer to, I believe you said 60, which is the mean. So, if I understood you correctly through the early part of this discussion, it is your position that gold will remain high and probably take out some more highs yet before it stops inflating. Is that correct?
I mean, gold's come so far, so I wouldn't be surprised if there's some kind of short-term pullback, but then ultimately it's not going to change the long-term direction with the scale of unsustainable debt of the US government. The Fort Knox audit that was supposed to happen isn't seemingly has gone quiet. And Trump is ultimately in need of a weaker US dollar in order for US exports to thrive. So there's so many, and of course, central bank demand as well. That's not going to stop anytime soon. And especially as we're seeing that Western investors with the gold ETFs are starting to become more gold bugs. They very may well be a short-term correction, but yeah, I do believe that gold will continue to rise. Maybe not at the pace that it has over the course of the last 12 months, but it will still continue to rise, and that will just exacerbate this silver historical valuation. But certainly the monetary side, Mike, I think it's often a misconception that silver is no longer a monetary metal. It still does have a correlation with the US dollar. It has an inverse correlation. It's not incredibly as strong as it is with gold, the gold in the US dollar, but it still is relatively strong. It's somewhere around minus 0.3, minus 0.4, which indicates that silver will sort of go on to rise as the US dollar weakens. So there's that element of things. There's also the rise in inflation expectations at the moment. And silver has proven itself in certain countries as an inflation hedge. Very, very recently in Turkey, they experienced this bout of hyperinflation where up to 2023, I believe, there was high inflation as high as 80%. And during that time, the silver imports into Turkey rose dramatically, more than quadrupled. And that shows to me that those investors in Turkey were looking for a safe haven, somewhere to park their money that protects their purchasing power. And I believe that silver functions in that way. But you imagine if that functions in a way on a grander scale in the developed countries of the world, whether that's the US, whether that's the G7, that would drive a lot of investment demand into silver. And we're not even talking about India yet, Mike, who are becoming a huge driver of silver demand.
No, and these are all going to start to factor into that. And I think we're starting to talk about the catalyst that's going to start to make the silver price move forward. So if I look at gold and silver as two race cars on a track, and gold is still accelerating, in order for silver to catch up, it's going to have to accelerate faster than the gold is, and that's where the opportunity is.
Absolutely. And we've talked about all the demand side, Mike, but really the key to understanding why the silver price will likely rise in the coming months is the supply side, which is to say that we have had these consecutive years of structural supply deficits as reported by the Silver Institute. It's expected to be slightly lower, the deficit in 2025, about 149 million ounces, and that'll be verified by the Silver Institute later this year when the report comes out next month, actually. But the reality is that prior to that, the average of the 4 years had been 189 million ounces of silver a shortfall of demand. And essentially that has been filled by the silver held on exchanges, as we've talked about. In total, I estimate that somewhere between sort of 500 and 550 million ounces of silver has come off those three major exchanges, the LBMA, the COMEX, and the Shanghai Future Exchanges, from the 2021 peak down to where we are today in 2025. Particularly the LBMA silver inventories have been eroded down to around 700 million ounces as of February. And of course, that has been a huge part of that, Mike. I know you're probably going to say this is, the silver isn't disappearing, it's just changing hands. It's just flooding to the COMEX, or it's flooding to, you probably mentioned before the call, it's on ships. I actually believe that it's being consumed by the industrial users as part of this enormous drive in solar demand, as part of the other electronics and power generation elements of silver demand, as part of India's consumption of jewelry. I believe that silver's gone. I actually think that 500 million ounces has been consumed, but I'm open to hearing your thoughts about why it hasn't.
My thoughts is a good chunk. We're probably both right. A good chunk of it is on ships. There's an arbitrage right now that makes both gold and silver more valuable in New York than it is in London. Gold transports by airplane and cargo plane, where silver transports by ship. And the simple reality is it's 88 ounces for 1 ounce of gold. So if you take a brick of gold, you need 88 bricks for the same value. So when there's huge volumes that are shifting, planes can't take the silver, but they can take the gold. So there's a lag of 7 to 10 days while that silver is going between London to New York on that. But you're not entirely wrong. Like at the same time we discussed that, bars of silver have been taken up by the Russian government and being put into strategic stockpiles there, and one can pretty much assume that that's not for inflationary insurance. That's for other purposes. So in that case, your industrial argument is holding in that fashion as well, where that silver is coming off the table and being used for industrial purposes.
Yeah.
Sadly for Russia, that's probably military, but that's pure speculation on my part. But
No, I would probably agree with you on that sense, Mike, that actually people assuming that the silver is being stacked by Russia as a monetary asset like gold, I think it's probably likely the opposite. It's likely the military aspect, and that's just the reality of it. You're right.
yeah, yeah. So I take a look at it, but again, we talk about that ratio. We're talking about large bricks of this moving between the exchanges. But the real price sensitivity, I think, is going to be when mom and pop consumer in the West goes, okay, I should probably buy gold. Oh, not at that price. Okay, silver looks okay, so I buy the silver. And I think that's the accelerant that gets put out on this.
Absolutely. And it's interesting to look at the way that the Eastern gold buyers began this trend of this enormous gold mania, essentially. And now the Western gold buyers are coming in because their sort of delayed onset reaction is the realization that, oh, hang on a minute, yeah, we do need an asset that preserves its purchasing power. We do need an asset that's scarce, that serves as the function of as real money. And it's interesting because that's happening right now with silver, also with India. The scale of silver demand um, has actually pushed up local prices to record highs in recent months. And that's going to obviously impact the jewelry and silverware sector, which in and of itself is an important aspect of silver demand. But ultimately, the investment inflows into the ETPs in India has been astronomical. And I expect that if this growth continues, it could be anywhere between 200 million and 300 million ounces as we head into 2027, 2028, which is a very, very significant amount and a very, very significant catalyst that could continue to exacerbate the supply deficit and ultimately drive the silver price higher.
Yeah, I like personally to kind of have an eye on jewelry in India because that's a culture that tends to want to wear their wealth on their body. So jewelry is a big, significant driver of wealth in India. And, much as we talk about when gold becomes unaffordable, people turn to silver. And I think what you're suggesting there is exactly that, is the gold is becoming unobtainable for the average Indian, and therefore they're turning to silver now to store their wealth.
Correct, exactly. That substitution effect could be very powerful.
Well, to mimic another Eastern term, I certainly don't know where this is heading, but we certainly are living in interesting times.
Very good. Very good.
If people want to follow your work, Ted, where would they do so?
Mostly on LinkedIn, Mike, as you know, Ted J. Butler, and also my website, tedjbutler.com, which is where you can find all my latest stuff.
Wonderful. I look forward to your article in our June issue, and we should be seeing you down the road at some point soon again.
For sure. As always, Mike, thank you. It's a pleasure.
Thank you. The Prospector News podcast is for educational purposes only. The opinions expressed are those of the participants and are not to be taken as investment advice. Listeners need to do their own due diligence and seek advice of a licensed investment advisor.